Step 7. Protecting your wealth with insurance and legal structures. As you build your wealth and expand your financial resources, it becomes increasingly important to take proactive measures to protect your assets. Life is full of uncertainties, and despite your best efforts, unexpected events can still threaten the security of your wealth. Whether it's an unforeseen medical emergency, a natural disaster, or a legal issue, protecting your wealth through the right insurance policies and legal structures ensures that you can weather these storms without derailing your financial progress. This chapter explores the essential insurance and legal structures you need to implement in your wealth protection strategy. By the end, you'll understand how to safeguard your assets and ensure that your financial foundation remains secure, even when life throws unexpected challenges your way. The basics of life, health, and property insurance. Life insurance, a safety net for your loved ones. Life insurance serves as a critical safety net, offering financial security to your loved ones in the event of your death. It provides a structured way to protect your family's financial future, ensuring they are not left in a difficult position if you are no longer around. In addition to replacing lost income, life insurance can help cover immediate expenses such as funeral costs, outstanding debts, e.g., mortgages, car loans, credit card balances, and other financial obligations, which can otherwise place a significant strain on your family's resources. The right life insurance policy can help your family maintain their standard of living, secure their future, and avoid potential financial hardship. Term life insurance is typically the most affordable form of coverage. It's structured for a set period, such as 10, 20, or 30 years. This type of policy is most effective for providing coverage during a specific period when your dependents are most likely to need it, such as when children are young or when you are paying off a mortgage. While term life insurance offers a death benefit to beneficiaries if you pass away during the term, it doesn't accumulate any cash value. Its simplicity and cost-effectiveness make it an attractive option for many people, especially for those who are looking for pure life coverage without the added expense of an investment component. Whole life insurance, on the other hand, offers lifelong coverage and can be viewed as a more comprehensive financial tool. Not only does it provide a death benefit to your beneficiaries, but it also has a cash value component that grows over time. The cash value acts like a savings account that earns interest, and you can borrow against it or use it to pay premiums if necessary. The trade-off for this added benefit is a higher premium cost compared to term life insurance. While this might make whole life insurance more expensive, the dual benefits of life coverage and growing cash value make it a viable long-term strategy for those looking to combine life insurance with a form of investment. Choosing between term life and whole life insurance depends largely on your financial goals and the needs of your family. If you are seeking affordable coverage for a set period to protect your loved ones until they are financially independent, term life may be the best option. However, if you are looking for lifelong coverage with the added benefit of accumulating savings, whole life insurance might be more suitable. In either case, life insurance offers a significant advantage by providing your family with financial support during a challenging time. It ensures that, even in your absence, your loved ones can continue to meet their financial obligations and plan for the future without facing immediate hardship. Life insurance not only brings peace of mind, but it also provides a sense of security knowing that you have taken proactive steps to protect your family's well-being. Imagine you are the primary earner in your family, and you have a spouse and 2 children who depend on your income for their daily needs and future plans. You've also accumulated a mortgage on your home, have car loans, and are saving for your children's college education. If something were to happen to you unexpectedly, your family could face immediate financial strain. Without a safety net, they would need to find a way to cover living expenses, mortgage payments, and any other debts or financial obligations you leave behind. Now, imagine you have a term life insurance policy in place that covers you for 20 years. This policy would pay a death benefit to your beneficiaries, your spouse and children, in the event of your death. The death benefit could cover several years' worth of income, paying off the mortgage and providing funds for day-to-day expenses. Your spouse could also use the benefit to ensure the children's education is funded and that they can continue to live in the home you worked hard to provide. Alternatively, if you had a whole life insurance policy, the scenario would offer additional benefits. In this case, the policy would not only provide a death benefit but also accumulate cash value over time. Your spouse could borrow against the policy's cash value to cover immediate expenses or use it as an additional resource for long-term financial planning. Even after the death benefit is paid out, the accumulated cash value could serve as a supplementary savings or retirement resource for your family, offering additional security. In both scenarios, life insurance provides a significant buffer against financial hardship. It helps your family maintain their lifestyle and ensures that they won't face a financial crisis just because of the loss of an income provider. By having life insurance in place, you can have peace of mind knowing that, even if you're no longer there, your family is protected from financial stress. Health insurance, shielding yourself from rising medical costs. Health insurance is an essential tool for shielding your wealth from the unpredictable and potentially devastating costs of medical care. When an unexpected illness or injury occurs, the expenses related to hospitalization, treatment, and medications can quickly add up, often exceeding what you can afford without insurance. Without proper health coverage, these costs could wipe out your savings or even push you into debt. Health insurance provides financial protection by covering a significant portion of medical expenses, ensuring that you can access the necessary care without sacrificing your financial security. There are two main categories of health insurance: public and private. Public health insurance programs, such as Medicare and Medicaid in the U.S., are typically available to those who meet specific eligibility criteria, such as age, income level, or disability status. While these programs provide essential coverage, many individuals opt for private health insurance because it generally offers more flexibility and broader coverage options. Private health insurance plans may give you access to a larger network of doctors and hospitals, and often provide additional services, such as dental or vision care, that public insurance programs might not cover. However, private insurance usually comes at a higher premium compared to public options. One popular type of private insurance is a high-deductible health plan, HDHP. HDHPs come with lower monthly premiums but higher deductibles, meaning you pay more out-of-pocket before your insurance covers most of the expenses. While this may seem like a disadvantage in the short term, it can be a more affordable option for those who don't anticipate frequent medical needs. Additionally, HDHPs can be paired with a health savings account, HSA, which is a tax-advantaged account that allows you to set aside money for medical expenses. Contributions to an HSA are made pre-tax, and the money in the account can grow over time, rolling over year after year if unused. This makes HSAs an excellent way to save for future healthcare costs, offering both immediate tax benefits and long-term financial security. Consider this example. Imagine that you face a major health crisis, such as a heart attack or a serious surgical procedure. Without health insurance, the cost of hospitalization, surgery, and rehabilitation could easily run into tens of thousands of dollars, which could lead to significant financial hardship. However, if you have health insurance, your plan will cover most of these costs, leaving you with only your deductible and co-pays to pay out of pocket. Additionally, if you've been contributing to an HSA, you can use that money to help pay for any medical expenses not fully covered by your insurance. This can help ensure that you don't face a heavy financial burden during a difficult time. Even if you face high medical costs, having health insurance and a well-funded HSA can provide peace of mind, knowing that you're protected from the worst financial consequences of a health crisis. Property insurance, protecting your home, assets, and personal belongings. Property insurance is an essential safeguard for your wealth, providing protection for your most valuable physical assets from a variety of unforeseen risks. In a world where life is unpredictable, having insurance helps mitigate the financial impact of damage to your home, car, or personal belongings caused by events like natural disasters, accidents, theft, or vandalism. These unexpected events can lead to significant financial strain, and without adequate insurance coverage, you could face steep costs that could take years to recover from or even lead to financial ruin. Homeowners insurance, for example, is a comprehensive policy that covers a wide range of damages to your home and personal property. If a fire damages your home, or if your belongings are stolen during a break-in, your homeowner's insurance will help cover the repair or replacement costs, ensuring that you don't have to bear the entire financial burden. Additionally, many policies also include liability coverage, which protects you in case someone is injured on your property and decides to take legal action. This coverage can also help cover medical costs, legal fees, and other expenses that could arise in such situations, which could otherwise be financially devastating. For individuals who own vehicles, auto insurance is similarly important. It is required by law in many regions, and it helps protect you against financial losses resulting from car accidents. In the event of a crash, auto insurance can cover the cost of repairs to your car, as well as medical expenses for injuries sustained by yourself or others involved in the accident. Beyond accidents, comprehensive auto insurance policies extend coverage to other incidents, such as vandalism, theft, or damage caused by weather events, such as hailstorms or floods. Take the example of living in an area prone to wildfires. Suppose one day, a fire breaks out and spreads quickly across your neighborhood, damaging your home and car. Without property insurance, you could be left with the responsibility of paying for repairs or replacements out of pocket, which could easily run into tens of thousands of dollars. However, with the right homeowners and auto insurance coverage, most of the costs associated with these damages would be covered, helping you rebuild your life without draining your savings. Your insurance policies would help provide a safety net, allowing you to recover and regain your footing in the face of such unexpected challenges. In addition to these benefits, property insurance often comes with the advantage of giving you peace of mind. Knowing that you're financially protected against a wide range of risks allows you to focus on other aspects of your life without constantly worrying about the potential for significant financial setbacks. This peace of mind is invaluable, as it helps ensure that your wealth is not entirely vulnerable to unpredictable events, allowing you to pursue your financial goals with confidence and security. Why you need to protect your assets from unexpected risks. Understanding the risks to your wealth. Understanding the risks to your wealth is critical to securing your financial future, and it's an ongoing process that involves identifying both foreseeable and unpredictable threats. Many of these risks are unavoidable, like health emergencies, but there are proactive steps you can take to mitigate them and protect your assets. Managing these risks effectively through insurance and strategic planning allows you to safeguard the wealth you've worked hard to build. Lawsuits and legal claims are one of the primary risks to your wealth. Regardless of how cautious you are, legal disputes can arise unexpectedly. For example, a car accident could lead to significant damages or injuries, or a business could face a lawsuit due to an unhappy customer or employee dispute. Without sufficient liability insurance or proper asset protection plans, you could be left personally liable for expensive legal fees and potential settlements. Even a minor incident could lead to months or years of financial struggles, especially if it results in a substantial payout that you are responsible for. Therefore, having the appropriate insurance coverage is crucial for protecting your assets and ensuring you don't face financial ruin due to unexpected legal issues. Health emergencies represent another substantial risk to your wealth. Health problems don't give warning signs and can escalate quickly, leading to medical bills that can spiral out of control. A serious illness, a required surgery, or a chronic condition that requires ongoing treatment can result in massive medical debt, especially if you don't have health insurance or if your plan doesn't fully cover the necessary treatments. The financial burden of healthcare costs could deplete your savings, cause you to rely on credit, or even force you to make sacrifices in other areas of life. It's important to have the right health insurance in place that offers the coverage you need for emergencies and ongoing care. Additionally, building a health savings account, HSA, can be an effective way to set aside money tax-free for future medical expenses. For business owners, the risk of business liabilities can also jeopardize your personal wealth. Operating a business comes with various legal and financial risks. Whether you're dealing with employee injuries, customer claims, product defects, or the potential for bankruptcy, the risks associated with your business can easily affect your personal assets if not properly addressed. Business insurance, such as general liability insurance, professional liability insurance, and workers' compensation insurance, can provide protection against these risks, ensuring that your personal wealth is not used to cover costs associated with business-related lawsuits, damages, or other liabilities. Business insurance can also protect you from loss of income in the event of business interruption, helping to keep your finances stable when things don't go as planned. For instance, consider a small business owner who manufactures a product that causes harm to a customer. Without adequate business liability insurance, the business owner could be held personally accountable for medical expenses, legal fees, and damages. This could lead to significant financial strain and potentially result in the loss of the business. However, with the right insurance in place, the policy would cover these costs, ensuring the business owner's personal assets remain protected. This is a clear example of why it's essential to plan for business risks and have comprehensive coverage to shield both personal and business finances. By recognizing the risks and vulnerabilities to your wealth, you can take proactive steps to safeguard it through proper insurance coverage and risk management strategies. Each layer of protection, whether it's for your home, health, car, or business, acts as a safety net that prevents unforeseen events from derailing your financial progress. Addressing potential risks head-on provides peace of mind, knowing that no matter what comes your way, you have a plan in place to protect your wealth and ensure your financial security. Estate planning, wills, trusts, and power of attorney. Ensuring your wealth is passed on according to your wishes. Estate planning is not only about distributing your wealth after you pass away but also about ensuring that your loved ones are financially supported and that your wishes are honored. It is a way to take control of what happens to your assets, your dependents, and even your healthcare decisions when you are no longer able to make those decisions for yourself. Proper planning provides clarity, reduces potential conflicts, and helps your loved ones avoid unnecessary stress during an emotional time. One of the foundational aspects of estate planning is having a will. A will is a legally binding document that outlines how your assets, such as property, money, investments, and personal belongings, should be distributed after your death. It can also address matters such as guardianship of minor children and preferences for funeral arrangements. Without a will, the state will determine how your assets are divided, and your family may face delays, legal fees, and disputes over inheritance. This could create unwanted tension among family members at a time when they should be grieving. By clearly specifying your wishes in a will, you can ensure that your property is passed on to the people you want and in the manner you intend. Trusts, on the other hand, offer additional flexibility and control in managing your estate. A trust involves appointing a trustee to manage and distribute your assets on your behalf according to your specific instructions. The main benefit of a trust is that it can bypass the probate process, which can be time-consuming, public, and costly. Trusts are especially useful if you want to control how and when your assets are distributed. For instance, you may want your children to receive their inheritance only when they reach a certain age or milestone. Trusts can also be beneficial for protecting assets from creditors or minimizing estate taxes. There are various types of trusts, including revocable and irrevocable trusts, each offering different benefits depending on your financial and personal goals. A power of attorney, POA, is another vital component of estate planning. It allows you to designate someone you trust to make financial or healthcare decisions on your behalf in the event that you become incapacitated or unable to communicate your wishes. There are two main types of POA, financial and healthcare. A financial POA allows the appointed person to manage your financial affairs, such as paying bills, managing investments, and handling legal matters. A healthcare POA allows someone to make medical decisions on your behalf if you cannot make them yourself. These documents are crucial to ensure that your financial and healthcare decisions are handled by a trusted individual who is familiar with your preferences. For example, without a proper estate plan, your estate could become entangled in probate, leading to prolonged court proceedings, high legal costs, and potential disputes between heirs. If you are unable to make healthcare decisions for yourself, a power of attorney can ensure that someone you trust is in charge of making those decisions based on your wishes, preventing the court from having to make those choices for you. Additionally, without a trust or will, your estate may be subject to taxes and other fees that could reduce the value of the inheritance you leave behind for your loved ones. Proper estate planning can minimize those costs and ensure that the full value of your wealth goes to the intended recipients. Ultimately, estate planning is an act of love and responsibility. It provides you with peace of mind, knowing that your wealth and personal affairs will be handled according to your wishes and that your loved ones will be taken care of. Whether you have a small estate or a large one, having a plan in place is an essential step towards securing your family's future and protecting your legacy. How to structure your business and personal assets for protection. Asset protection strategies for personal and business wealth. Asset protection strategies are critical for maintaining the security of your wealth, especially in an unpredictable world where lawsuits, economic downturns, and other unforeseen events can threaten your financial well-being. By structuring your personal and business assets wisely, you can minimize the potential risks that could jeopardize your hard-earned wealth. The use of legal entities such as limited liability companies, LLCs, corporations, and trusts plays a key role in separating personal assets from business risks, ensuring that your personal wealth is protected from liabilities associated with your business activities. An LLC is one of the most popular choices for asset protection, especially for small businesses and entrepreneurs. It acts as a legal entity distinct from the individual who owns it, providing personal liability protection. This means that, in the event of a lawsuit or financial trouble within the business, the owner's personal assets, such as their home, savings, or personal property, are typically shielded from being used to satisfy business-related debts or judgments. LLCs are relatively simple to set up and offer flexibility in terms of management and taxation. They provide a critical layer of protection for small business owners and freelancers, allowing them to focus on their operations without worrying about the risk of losing personal assets in the face of a legal dispute. Corporations, while offering many of the same benefits as LLCs, take asset protection a step further. They establish a separate legal entity that is distinct not only from the owner but also from its operations, employees, and shareholders. The corporate structure is particularly beneficial for larger businesses or those operating in high-risk industries. By incorporating, business owners ensure that their personal wealth is protected from any financial troubles or liabilities incurred by the business. This is particularly important for those involved in industries where lawsuits or financial claims are more common, such as real estate, healthcare, or manufacturing. Corporations also offer enhanced credibility and opportunities for raising capital, which may be important as the business grows. Another highly effective asset protection strategy involves using trusts. Trusts are legal arrangements that allow individuals to transfer ownership of their assets to a trustee, who holds and manages those assets on behalf of the beneficiaries. By placing assets into a trust, they are often shielded from creditors, legal claims, and other risks that could threaten an individual's personal wealth. Trusts are particularly useful for high-net-worth individuals or those looking to preserve wealth across generations. They not only provide asset protection but also allow for more control over how assets are distributed and when. For instance, an individual might set up a trust to protect family wealth, ensuring that the assets are distributed to heirs according to specific terms, such as reaching a certain age or achieving particular milestones. The use of trusts in asset protection is not limited to individuals with large estates. Even those with moderate wealth can benefit from establishing a trust, particularly if they want to avoid probate or provide financial security for loved ones in case of incapacity or death. Trusts can be particularly helpful in protecting assets from claims made by creditors or lawsuits, as the assets are no longer considered the personal property of the individual but are owned by the trust. To illustrate these strategies in action, imagine a real estate investor who owns multiple rental properties. In this case, the investor might choose to establish an LLC to hold the properties, thereby protecting personal assets from any legal claims or liabilities associated with the properties. If a tenant were to sue the business for an injury or property damage, the lawsuit would likely be confined to the LLC, meaning the investor's personal wealth, such as their home or savings, would remain protected. This separation between business and personal assets is crucial in minimizing the impact of legal or financial risks on an individual's personal wealth. By combining multiple strategies, LLCs, corporations, and trusts, business owners and individuals can create a comprehensive asset protection plan that safeguards their wealth from various threats. Whether it's limiting personal liability, shielding assets from creditors, or ensuring the smooth transfer of wealth to heirs, these legal structures provide essential protection that can help preserve wealth across generations. Ultimately, the right asset protection strategy can not only secure your financial future but also provide the peace of mind that comes with knowing your wealth is safeguarded against life's uncertainties. Insurance and legal structures to shield wealth from lawsuits. Using insurance and legal structures to safeguard your wealth. Insurance and legal structures are integral components of a comprehensive wealth protection strategy. When combined, they provide a multi-layered defense against financial risks, ensuring that your assets are shielded from potential threats. Insurance, while essential for protecting against unexpected events, only addresses certain types of risks, such as accidents, health issues, or property damage. Legal structures, on the other hand, help you separate your personal assets from business-related risks, minimizing the chance that creditors or legal actions will affect your wealth. Liability insurance, including general liability and professional liability coverage, is a critical safeguard for both individuals and business owners. General liability insurance protects against claims related to injuries, property damage, or accidents that may occur on your property or as a result of your business operations. Professional liability insurance, on the other hand, is essential for professionals offering advice or services, as it covers claims related to errors, omissions, or negligence in the course of providing professional services. Umbrella insurance is an additional layer of coverage that kicks in when the limits of your other insurance policies are reached. For instance, if you're involved in a lawsuit that results in a settlement exceeding the coverage limits of your general liability policy, umbrella insurance steps in to cover the remaining costs. This can protect your personal wealth, including savings, investments, and property, from being used to pay for legal fees or damages beyond your policy's limit. Legal structures, such as limited liability companies, LLCs, and corporations, are equally important in safeguarding your wealth. LLCs provide a barrier between your personal assets and your business liabilities. If your business is sued, your personal assets, such as your home and savings, are generally protected. Corporations, while offering a similar level of protection, create a separate legal entity for your business, ensuring that your personal wealth remains shielded from any business-related financial obligations or legal actions. For example, imagine you run a small business offering consulting services. A client sues you for a mistake made during a project, and the settlement exceeds the limits of your business insurance. With umbrella insurance in place, it would cover the excess costs, preventing your personal savings or assets from being at risk. Additionally, if your business is structured as an LLC, your personal wealth would be protected from any business-related liabilities, further reducing the financial impact of the lawsuit on your personal finances. The bottom line: as you continue your journey toward financial independence, protecting your wealth is just as important as building it. Life insurance, health insurance, property insurance, and legal structures are vital tools for shielding your assets from the risks of life. Estate planning ensures your wealth is passed on according to your wishes, while the proper legal structures help protect your personal and business assets. By implementing these strategies, you can safeguard your financial future, allowing you to focus on growing and preserving your wealth over the long term.